Hello everyone, it is Sunday, March 6th, and this is episode 53 of Odds Are, your S&P 500 weekly market forecast. Alright, let's take a look at what happened last week. So, we'll go right down the list here. So, for starters, we did stay within the expected settlement range between 42.62 and 44.59. Now, we did not have a breach of the breach points. You'll notice here that we didn't come close to the 44.82 or the 41.92. Not surprising, since the volatility in the weeks preceding this basically helped to expand and push out the breach point range out pretty far. So eventually you're going to have that time where you won't breach those points because the volatility starts to settle down a little bit. Now, the third element to this is that the market did actually move as predicted. I said that we were going to be moving closer to that red midline, so you can see that the entire week it was up and down, but slowly progressing towards that red midline to where it breached just, intraday on Thursday and then closed below, and now we're still kind of like in that range, but we moved much closer to the midline of the Bollinger Band, which is that red midline cutting across the blue shaded area, and that is what we expected. Now, we did not have, like I said, the breach. We closed within the range, so let's see what that sets us up for next week. All right, to begin with, we're going to look at the moving averages. We are still bearish on short-term and medium-term because the market activity has still been to the downside. Even though we're moving slightly up towards that midline, still definitely not enough movement to the upside to switch that short-term back to neutral. So we are still bearish on both averages. Long-term has not changed yet. Like I said, that takes a while for us to flip, but if we flip that to neutral, look for also the short-term moving average to possibly go back up to a neutral, because once that long-term kind of like starts to shift, you're going to have to get a little bit of people buying the dip. It's not going to be basically red bearish all the way across unless something massive happens. You're going to see some fluctuations in the short term if we move the long term into neutral territory. All right, and now let's take a look at the strike points that we're looking for next week. So we are looking at the breach points between 42.44 and 44.11. The breach points this week, take a look at this. This is one of those times where it gets a little exciting. We did not have a breach last week, so that means that the probability of having a breach this week goes up to 99.49. So let's, 99.5% odds that we're going to breach either 44.11 or 42.44. That being said, look at where the expected settlement range is. We're expecting to settle between 41.81 and 43.75. So we are outside of the range on the top side, 44.11, but we are inside of the settlement range on 42.44. The odds of closing within that range, 72.06. So higher probability of the breach than there is of staying within that expected settlement range. And then the parabolic SAR has come down to 47.29, still outside of the realm of probability, but not possibility. We've seen large, V up moves, but I don't think with everything going on, we're going to get close to that 47.29. All right, and let's put this now into the relative view. And let's talk about this because you see the blue line cutting across the whole screen, so that's where the market's at. And let's factor in now the Bollinger Band range, the midline, and the strike prices. Considering that we are expecting almost certain, there's still a possibility we won't. It has happened in the past before, but almost certain we're going to breach one of those 2 points, 44.11 or 42.44, then I'm thinking 44.11 looks a lot more appealing to me, because when we do get to that midline, we tend to breach or poke above it a couple of times and then come down. It's never just a clean get up to the midline and then just come straight down without really breaching it. We did have a little bit of a poke through on Thursday, like I said, but that 44.11, I think that it's very possible we go up to 44.11 as the breach of the midline and then come back down. If the midline holds the resistance. If it doesn't, then of course the red midline becomes support if we breach above it. Either way, that sets up the case for the 44.11 upper breach point. Now to the downside, 42.44, that also has some pull towards it, because when we bounce off that midline, we go down to the lower edge of the Bollinger Band, which is the lower blue line of the shaded area. So if we go down, then we could easily breach 42.44 and then come back up to stay within the expected shaded area, but stay within 41.81 and 43.75. Right now, I'd say it's probably a 60-40. I'd give it 60-40, 60% towards the 44.11 and 40% to the 42.44. So I think we have a better chance of breaching upward than we do to the downside, but not by much. It's pretty much, like I said, 60-40, not a huge margin there, one side or the other. We have to be prepared for both. But if we do breach 44.11, then that's where I would start looking at, is this going to pull back down, or is this now going to create support from the midline? And that's going to be determined on whether we close above or below 43.75. So picture this: we go up, close above, breach 44.11, and then we come back down, but we don't close below 43.75. That to me tells me that we are now going to be entering to the upper half of the Bollinger Band range, and we are going to be on an upward trajectory, barring any major events happening geopolitically. So those are the things to consider going into next week. And now let's go to didn't see that one coming. So what I didn't see coming last week was that we would not have a breach of the breach points. Now, there have been times where I have flat out said I think we're not going to breach one of these points because they are too wide, because they've been spread out too far because of the recent volatility. Honestly, I probably should have thought that. I probably should have called that one because it was one of those setups. But with everything going on, it would not have surprised me if we did breach one of those points. That being said, when we look at that midline, it's really playing a big factor here, more than usual, honestly. So we're being drawn towards that midline, and as we're going into next week, you can't be surprised if the market keeps bouncing off of and returning to that midline. So again, whether we go above it, come back down and establish it as support, or whether we breach it and then come back down and it acts as resistance and pushes us down towards the lower edge of the Bollinger Band range. We have to be ready for both, and you can't say you don't see that coming. And now we'll wrap up with the quote of the week, and this one is by Mr. Ned Davis, who is the founder of Ned Davis Research. And Mr. Davis says, "We are in the business of making mistakes. Winners make small mistakes. Losers make big mistakes." Now, I love this because it completely flips the perception of what it means to win in the markets on its head. You usually think, well, I want to win. I'm in the business of making money. I'm in the business of minimizing my risk and not making mistakes. And he completely goes the opposite direction and says, we're all in the business. Like, that's what we're in the business. We're going to be making mistakes. And the trick is to make small mistakes and not big mistakes. And that's what differentiates the winners from, that's what separates the winners from the losers. And I love that because it starts off from the premise of recognizing, understanding, admitting, and preparing for the fact that you're gonna make mistakes. It is not a matter of if, it's a matter of when, and it's a matter of how bad those mistakes are. So knowing as you go into this, knowing that you're gonna make the mistakes and knowing that your job is to make small mistakes and use those small mistakes to build up your wealth and build up your experience and your strategies, that's way better than going into it with the burden of feeling like you have to be mistake free. So you're going to make mistakes. We all make mistakes. Let's make small ones. Let's learn from them. And that's going to make us better week after week, month after month. And hopefully that is going to also inspire you to try new things, new strategies, and explore new opportunities in the markets, as long as you know how to control and mitigate those risks, or, as Mr. Davis says, making small mistakes. All right, guys. Well, on that note, enjoy your week. Hopefully, we hear some good news. Hopefully, things settle down out there in the Russia-Ukraine conflict. But we're going to try to stay focused on the S&P. We're going to stay focused on what this means for the markets and how we can prepare for things coming up 1 week at a time. All right, guys. Take care and see you next week.